What's up, everyone? It's Scotty with Money Vesting. So we've got another one biting the dust here. First Republic Bank now possibly going under receivership. Not to mention that there are going to be several bidders, including JP Morgan, PNC, and Bank of America, that are going to bid on this company, and the offers are expected to come in as early as Sunday afternoon, so tomorrow. And the new owner of First Republic could be announced as early as Monday. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. There is a 16% discount available till the end of this month, so literally one more day left if you want to take advantage of that. So link's going to be down below with limited spots available. And this right here is the report that came out. First Republic Bank reportedly on the verge of collapse, and federal regulators are preparing to seize control of the San Francisco-based First Republic Bank, according to multiple reports. And as the institution appears on track for possible collapse in one of the biggest banking busts in American history. And this seems to be like the normal case for every single week, every single month in the U.S., where every single one of the biggest banks in the U.S. is going under or going into receivership because of the banking failure. Now, this is a clear sign why the banking collapse or the banking crisis is not done yet. We're not out of the woods just because we're not seeing a lot more banks go down. Doesn't mean that it's over. As we are seeing a lot of these earnings come out for a lot of these small, medium regional banks, we're now starting to understand the gravity of the situation. And with First Republic, unfortunately, the situation got so dire that we had over $100 billion of outflows. $100 billion. And this is such a flawed system, right? Because if you really think about it, what ended up happening was Bank of America, JP Morgan, Wells Fargo, and Citi, the four largest banks in the US. First, the banking crisis happens. The money is pulled out of these small and regional banks, right? Such as First Republic, Silicon Valley Bank, a couple other banks that were struggling at the time. So the money gets pulled out. The deposit base starts to dwindle for these small and medium banks. Where does this deposit base go? You guessed it, big banks, right? Some of the larger banks, JP Morgan, Bank of America, Wells Fargo, and Citi. And those companies reported fantastic earnings. They reported, a significant amount of inflows in deposits. They reported very nice margins and interest income and, trading profits and everything just booming in those areas. Now, when these banks are weak and they're getting weaker, then these big banks step in to buy them at pennies on the dollar. What a fantastic strategy. First, they obviously take all their deposits and then they step in to buy them on pennies on the dollar. So absolutely incredible. This whole system's kind of built on. So Reuters first reported Friday afternoon that the FDIC is expected to swiftly take the bank under receivership. And the share price for First Republic stock was declined 43% or something. So obviously the price has been getting hammered. And on Friday, it was down another 43%. In the last couple months, this right here is First Republic Bank's chart. I mean, it was trading as high as $149, $150 in the beginning of February, right? If you go back only 2 months, nobody would have thought that this stock would be trading at under $3. Right? So only 2 months ago, and back in February, you ask anyone about First Republic trading at $145, no one would have guessed that in 2 months, not even 2 months, it would be trading at under $3. That's how fast markets move, and that's how fast also life changes. This right here, 97% drop here. Now, the FDIC has started reaching out for bids for potential buyers if it takes a bank under receivership. And according to CNBC, which reported receivership is likely, but there is still hope for an outcome that doesn't require the FDIC from seizing the bank. And the FDIC did not immediately comment, but this right here is the report where big banks, including JP Morgan, Bank of America, have been asked for final bids on First Republic. So U.S. regulators have asked banks for their best and final takeover offers for First Republic by Sunday afternoon, in a move that authorities hope will calm the markets and cap period of uncertainty for regional lenders. JP Morgan and PNC are likely bidders for the ailing lender, which would be seized in receivership immediately, sold to the winning bank, according to people with the knowledge of the situation. And Bank of America is also being given a chance, is among other institutions that are weighing a bid for First Republic. And if regulators led by the FDIC receive an acceptable offer by Sunday, it's possible that a new First Republic owner could be announced early Monday. And that scenario would create the least disruption for First Republic customers, not to mention even the market. It would create the least disruption because we would start the day knowing that their bank was now owned by a financially stable operator. I don't know so much about financially stable. They are the biggest. They are considered as systemically important banks. That's why they're never going to fail. But are they financially stable though? Really? I mean, that's where we are. I mean, in this financial system where the industry continues to get more and more consolidated, right? We talked about how there were over 15,000 banks back in the 1990s, even 1980s, and that number has dwindled down to now under 5,000. So we have seen a 67% decline in the number of banks in the US, including small, medium, large, and that number only continues to consolidate. I mean, First Republic has been around for decades. I mean, they've been around for years, right? 1985 is when the company was founded by James Herbert. So it's not like a fairly new bank. It's not like Silicon Valley Bank. Silicon Valley Bank was fairly new, but First Republic has been around for a long time with so many more in deposits and assets under management. And yet, unfortunately, this is going to be the fate of one of the most prominent banks in the US. And this is still not over. And, the idea about customers and deposit bases, I think that can be assured that the deposit bases are going to be safe. Even Warren Buffett mentioned, and he, mentioned that he's willing to take up that bet for $1 million with anyone in the world that thinks that deposits are not going to be made whole. He's willing to make that bet. He said that depositors are going to be safe. They're going to be made whole regardless of the situation in the U.S. economy. Because think about it, right? Psychologically, if depositors were not made whole, that would create a catastrophe in the U.S. economy, right? That would literally just remove the entire trust in the system. Like if I, for example, knew that some depositor was not made whole because of their deposit in a bank, I would most likely not even keep money in the bank. I would just take it out, right? I would just convert it into gold or something, right? The entire system is unfortunately built on trust. And the trust goes away, everything goes away. So I don't think the depositors need to worry for any bank, whether it's First Republic or any other bank. But the real question then becomes, what's going to be the state of the industry moving forward as it continues to consolidate just in a handful of new companies? Because these new companies, these big companies, these large banks, SIBs, they don't cater to the small, medium businesses. They don't cater to the farmer who's working in, let's say, Texas or Carolinas and trying to build their business, right? They don't work with them directly. These are large banks. They're mostly focusing on financial services, technology, but it's really the backbone. The backbone is a small, medium, regional banks that really cater to more individuals and small, medium businesses that really are the backbone of America. So it's going to be quite interesting, and the whole system really just makes me sad. I've talked about it time and time again in my previous videos, but it's just unfortunately very, very rigged financial system. And not to mention that the deposit lines and the swap lines with the Federal Reserve are open, and they are providing more liquidity to some of the bigger banks to kind of salvage or make their blow more soft when it comes to the damage they've done with the mortgage-backed securities and U.S. Treasuries on their balance sheet, because they're still holding on to unrealized losses. That's why I mentioned that they're not really financially stable, as this report mentions, because they're still holding on to a lot of unrealized losses. So anyway, hope you guys enjoyed this video, and let me know your thoughts down in the comment section below. First Republic stock chart just absolutely looks like a meme stock here in the last couple months here. Again, stocks take staircases up and elevators down. That's something that we always have to remember for any company out there. Rest in peace, my friend. Rest in peace. So hope you guys enjoyed this video. Found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord and Patreon is going to be down below. As always, happy investing. I'll see you all in the next video.